So the bond yield curve is moving rapidly toward inversion. And for many, it's a clear harbinger of a recession that will come shortly thereafter. But my next guest also says inverted curve is a signal that, quote, something is broke. Joining me now, Bianco Research President Jim Bianco. Jim, what's broke right now?
Well, right now, nothing is broken because the yield curve has not yet inverted. But what it has done is it's moved a tremendous way towards inversion. Now, let me explain broke. When short-term interest rates are above long-term interest rates, there's a squeeze on the financial system. That usually shows up either through slower economic growth because of reduced lending, maybe lower asset prices, otherwise known as a bear market, or the plumbing of the financial system breaks, a default like we had in 1998, or with the repurchase market having problems in 2019, or some combination of all of that. The thing about what's happened is the yield curve usually flattens and inverts when the Fed is raising rates. It's done most of the work towards inverting before even we've gotten the first rate hike. So that's been a little bit eye-opening.
What would that mean then? I mean, obviously, Jay Powell and company, they're looking at this. What does it mean with respect to their game plan and rate hikes?
Typically, the way the yield curve inverts is the Fed starts raising rates. The problem is they don't know when they've achieved their objective, so they keep raising and raising, and then eventually the markets plunge or the economy goes into recession or something breaks in the financial system, and they go, okay, we went too far and we got to stop. What this is potentially saying is 1 or 2 rate hikes might be all it would take in order to break something, which is a little disconcerting that it might only take 50 basis points or 75 basis points in the funds rate, which doesn't sound like much, to get people to believe, or the marketplace to believe, that we're going to run into trouble because that's too high an interest rate. That's the,
let's call that the oops moment.
Right.
Your thoughts on the impact here of higher gasoline? Obviously, you know, petroleum goes into so many different products, and we know that there are other things we spend more money on, but this gasoline always seems to be the one thing that gets everybody angry.
Yeah, because gasoline is the most visceral thing, right? It's on every corner. When you drive down the street, you could see the price, and that's why we see it. I think what people got to keep in mind about this rise in gasoline prices, yes, it is only 3 cents or 4 cents higher than it was at its peak in 2008, although it is a new high. You're also getting spikes in food prices and other commodity prices and a general level of inflation. If this was gasoline alone, then, you know, that would be something we could weather. But coming on top of everything else, every other price that's going up, it might almost become too much to bear.
Yeah.
The fear is demand destruction. That's a fancy word for saying, I'm going to park the car, I'm not going to drive. Well, that means you're not going to do some economic activity. You're not going to go to the store. You're not going to go out to an entertainment venue or something like that. And then there's lost revenue for wherever you were going to go, and it slows the economy.
We got less than a minute, but I have to ask you about this. President Biden set to sign an executive order on crypto. Apparently, it's going to direct federal agencies to examine potential regulatory changes. There's also talk about national security and the impact of digital assets. You know, Jim, last week, going back to those Powell hearings, I mean, it's like everyone had their hair on fire. It was like they were going crazy. Powell, Senator Warren, about crypto having to reel it in. What are you expecting to hear this week?
I'm hoping that it's going to be a positive, because one of the problems that crypto has is you've got the SEC, the CFTC, the OCC, the Fed, all going in different directions, and which way is going to get regulated, that they're going to all get on the same page with a set of regulations. But that said, what's happened is, let's go back a month ago, Canadian truckers, the Emergencies Act, banning people taking their money away from their bank accounts, then essentially taking Russia out of the financial system. These are the best commercials crypto's ever had when it comes to, you want to find a place to save, to protect your money, because governments can take it from individuals like they did in Canada, or they can take it from whole countries like we did with Russia. You may agree with those, but it is disconcerting that that kind of power has been given to government, and crypto is a place where you can protect yourself. And this is, like I said, this is better than 40 Super Bowl commercials right now for people wanting to get into crypto. And I think regulators know it, and that's why their hair's on fire. They've kind of unleashed it, and they're worried about what it's going to lead to.
Yeah, well, everyone should be concerned about that. Too much power. Jim, thank you so much, my friend. Appreciate it. All right, folks, follow up from the